Hey everyone! Last week, Marcus and Millichap hosted 7 live interactive webcasts focused on 7 different property types. In this video, I'm going to share with you the top question we received from all of the audiences. For the webcast, we were joined by a range of active investors and industry leaders in discussing the 2021 outlook for self-storage, retail, office, multifamily, seniors housing, industrial, and hospitality real estate. Replays of all 7 webcasts are available and can be accessed through our website, marcusmillichap.com. Interestingly, in every webcast, one question came to the top. Is now the right time to invest? The question often came from investors who were considering the diversification of their portfolio, moving capital from one property type to another. Other times, the question was from investors who put activity on hold for the pandemic. And there was also a lot of interest from investors new to commercial real estate. The answers from our panelists varied, but carried a common theme. In the self-storage conversation, the answer was cautiously optimistic, but they warned not to jump in without doing the appropriate research and engaging professional management. The answer in the retail webcast had more nuances. There is considerable variance by retail property subtype, so depending on the type of retail property and the health of the local market, now could be a very good time to acquire properties. One of the participants in the industrial webcast expressed caution, citing the strong investor demand for that property type and suggesting that current pricing may be elevated in some areas of the country and that now actually might be a better time to sell. But one of the most interesting answers came in our hotel webcast. Hotels are the property type that have been hit hardest by the pandemic, and his response actually rang true for all property types. He said, "There's less uncertainty today than there was a month ago before the vaccines were announced. And it looks like there will be even less uncertainty as we go forward. It's unlikely prices will fall as uncertainty abates. They will likely only go up." Investors need to do their research. Not every asset is a prime acquisition candidate, and investors shouldn't plan on a quick turn. But if they look forward 3 years, 5 years, or 7 or 10 years, the average real estate hold times, then the values become apparent. Looking at the underlying demand drivers for assets on a long-term basis is key, and there are many opportunities out there today that have a sound long-term outlook. In addition, the consensus across all of the webcasts was that there will be few truly distressed assets that come to market, and that the significant capital targeting real estate will bid up most underperforming properties. So investors should not expect to buy commercial real estate for pennies on the dollar. Yes, some properties will likely sell for a discount, like outdated enclosed malls and perhaps some big box hotels that cater to major events and conferences. But these are not typically the target of private investors. Sales activity has risen strongly since it hit the second quarter trough, and although it's not back to normal yet, the outlook for 2021 remains positive. In addition, the low interest rate climate and strengthening availability of debt capital are fueling sales as levered yields are currently exceptionally strong. This suggests that 2021 could deliver a recovery in investment activity, particularly if investors who put activity on hold for the pandemic come back to the market in force. Ultimately, investors need to look past the short-term uncertainty and focus their eyes on the horizon.